It's mid-April. You're sitting at your kitchen table, surrounded by a mountain of crumpled receipts, W-2s, and that half-empty cup of cold coffee that's been there since Tuesday. You just hit Calculate on your tax software, and that little red number at the top of the screen, the one that tells you how much you owe, just jumped by another $800. You feel that sudden, sharp tightness in your chest. You've worked 2,000 hours this year. You've skipped the vacations, you've played by the rules, and yet it feels like the government is reaching into your pocket and taking a victory lap with your hard-earned cash. You find yourself wondering, how do the rich people always seem to have a $0 tax bill while I'm struggling to pay for groceries and the IRS at the same time? It feels like there's a secret manual for the wealthy that you just weren't invited to read. My name is Badger, and I spend way too much time thinking about how to keep more of your money where it belongs, in your pocket. If you're someone who feels like taxes are a black hole draining your financial future, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. The Great American Tax Lie. Look, here's the thing. Most people think that the tax code is designed to punish them. They think it's 7,000 pages of thou shalt not. Look, it's actually the opposite. The tax code is essentially a series of incentives. The government wants you to do certain things, save for retirement, buy a house, get an education, or start a business, and they are willing to pay you in the form of tax breaks to do them. Here's what most people don't realize. According to a recent study by the GAO, millions of Americans overpay their taxes by nearly $1.6 billion every single year because they simply don't claim the credits and deductions they are legally entitled to. They leave an average of $400 to $1,200 on the table. Today, we're going to find your $2,000. Now, you might be thinking, Badger, I just take the standard deduction. Isn't that the easiest way? For 90% of people, yes. But this standard deduction is exactly what it sounds like. It's for standard people. We want to be wealthy people. This is where it gets really interesting. 1. The Saver's Credit, the government's 50% match. This is the single most ignored tax break in the United States. It's officially called the Retirement Savings Contributions Credit. The reality: the government will literally give you a tax credit just for putting money into your own 401k or IRA. The math: if you earn under a certain threshold, around $76,500 for married couples in 2024, you can get a credit for up to 50% of your first $2,000 in contributions. That is a $1,000 straight reduction in your tax bill. The psychology: most people think they can't afford to save for retirement. But if the IRS is paying for half of your contribution via a lower tax bill, you can't afford not to. 2. The Lifetime Learning Credit, LLC. Most people know about the American Opportunity Tax Credit for college students. But what if you're 35 and taking a coding bootcamp or a marketing course to increase your earnings velocity? The break: the LLC gives you 20% back on the first $10,000 you spend on tuition and fees. The ROI: if you spend $2,000 on a professional certification, you get $400 back in a tax credit. You're essentially getting a 20% discount on your self-improvement. 3. Jury duty pay surrendered to employers. This is a weird one, but it happens more than you think. If your employer pays your full salary while you're on jury duty, but requires you to hand over that $15 a day jury check to the company, you shouldn't be taxed on that $15. The strategy: you can deduct that amount from your gross income. It's small, but wealth is built on the margins. 4. Student loan interest paid by your parents. Look, if your parents are helping you out by paying your student loan installments, the IRS treats that as a gift to you. The loophole: even though you didn't write the check, the IRS allows you to claim the student loan interest deduction up to $2,500. The math: at a 22% tax bracket, that's an extra $550 in your pocket. Your parents can't claim it, unless you're a dependent, so you might as well take it. 5. The Hobby Turned Business, Section 162. Now, you might be thinking, I have a side hustle, but I didn't make a profit this year, so I can't deduct anything. Challenge the assumption. If you can prove you have a profit motive, meaning you're actually trying to make money, you can often deduct your expenses even if you're in the red for the first year or two. The analogy: your side hustle is a seedling. You have to buy the soil and the pot before the plant grows. The IRS lets you deduct the cost of the soil. 6. State sales tax deduction. If you live in a state like Florida, Texas, or Washington with no state income tax, you might feel cheated on federal deductions. The forgotten break. You can choose to deduct state sales tax instead of state income tax. If you bought a car or a major appliance this year, the sales tax you paid could be significantly higher than the standard table amount. 7. Health Savings Account, HSA, the triple threat. The HSA is the only account in existence that is triple tax advantaged. Money goes in tax-free. It grows tax-free. It comes out tax-free for medical expenses. The insider secret. Even if you don't use it for medical stuff now, after age 65, it basically turns into a traditional IRA. It is a secret wealth vault that reduces your taxable income dollar for dollar. 8. Energy-efficient home improvements. Did you buy a new water heater? Better windows? A heat pump? The break. Under the Inflation Reduction Act, you can get a credit of up to $1,200 annually for general weatherization. The surprise, this isn't a one-time thing. You can spread your home upgrades over several years to max out the $1,200 credit every single year. The surprising insight, the wealthy mindset. Here's what most people don't realize. The difference between a $2,000 refund and owing $2,000 isn't luck. It's documentation. The psychological force that keeps people poor is administrative friction. We hate paperwork. We hate filing. So we take the standard deduction because it's the path of least resistance. But that resistance is exactly where your $2,000 is hiding. Wealthy people don't find taxes boring. They find them profitable. The actionable step and motivation. I want you to do one thing tonight. Don't file your taxes yet. Open a folder on your computer called 2024 Recovered Wealth. Go through your bank statements for just 3 things: education expenses, medical bills, and retirement contributions. Stop letting the government be a silent partner in your bank account who takes the profits but none of the risks. You worked for that money. You traded hours of your life. Hours you will never get back for those dollars. Claim your credits. Fill out the extra form. It might take you 2 hours, but if it saves you $2,000, you just paid yourself $1,000 an hour. If you want more deep dives into the math the rich used to stay rich, hit that subscribe button. We're building more than a bank account here. We're building a fortress.